You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
There's a bit of a risk here just due to demand destruction, and if these American investors who have jumped on the gold train get distracted with the next hot sector, they'll be gone in a second, and we'll be eating the shares of all their gold mining stocks, and price of gold will be off several hundred more dollars. So we'll see what happens.
I'm Bill Powers, and this is Mining Stock Education. Thanks for tuning in to yet another episode. In today's show, you'll be hearing from asset manager, Rosseau Asset Management, Warren Irwin. He's a fund manager, and if you've been following this show for the last couple of years, you know that Warren has been generous enough to be a recurring guest. We primarily have spoken about investing, or I should say, avoiding mining scams. And Warren also shares about his thoughts on investing in the resource sector, and often shares some of his picks in his fund and why he invests in those companies. So Warren, thanks again for coming on the show. And how about I start by picking your brain on regarding gold? Gold has been, roaring these last 9 months. You think it's going higher, or are us gold bugs too excited right now?
Yeah, well, my view just generally is I have a different view on gold than most other people. I've been investing in the gold market for several decades. My view is this right now at this time. There's a lot of people that are out there promoting gold, rah, 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 go, 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 gold. This is the time. It's going to 5,000 an ounce, that sort of thing. And those people, if you look deep down into it, they have an agenda. They're trying to get people hyped up about gold. They'll flog you some worthless gold shares. The reality about gold, and I own gold bullion on a personal basis as my version of just the ultimate financial security, in my opinion. I'm a huge fan of gold long term because, as you know, they're printing money like crazy. So long term, gold is going to do fine. It's going to be a good asset to have. And it's for no other reason than the fiat currencies get printed every single year. So to park some money away in gold, I think, is a very smart thing to do. Also, one place I have some very unique insights is into finding gold. I've been involved in quite a number of very large gold discoveries around the world in the last number of decades. We are having a really, really tough time finding gold, especially in the quantities that are going to be needed to replace the resources that are being mined. So gold is getting tougher and tougher to find, and the cost of production is going up and up just due to inflation of materials and equipment. So over time, those are the two greatest factors that are pushing the price of gold higher. And without a doubt, in 5 years' time, gold will be higher. Now, the problem we have here near term is that we've had a number of speculators coming at us, let's say from the US. Big US investors throw some money at gold, and they could really move the gold market quite a bit. The problem with that is they generally have a shorter term view on the market and can be quite flighty. You've heard the old thing, you watch a dog and you think you have the dog's attention, and there's a squirrel runs across the yard and it's gone, right? That's sort of a number of these American investors are very much like that. So whenever there's a new party in town, there's a vaccine, you saw it recently here, there's a new vaccine, well, let's jump on the airline and cruise stocks, and they're dumping gold and they're onto it. The problem we have with this recent run up in the reasonably quick run up we've had in gold is it's destroyed demand from the two of the major sources of gold buyers, which is the Indians. India is a big gold buyer, for instance. So if you've just moved gold up from 1,200 to 1,900 an ounce, that has an impact on their ability to buy gold, how much they'll buy, how much they can afford. And maybe they'll say, listen, I've got a whole bunch of gold jewelry here. I'll sell into the gold market. And now might be a time and I'll pick it back up later when it's a little bit lower. And it's definitely, they're value conscious and they don't want to spend big numbers, especially if they expect a short-term setback here. So it's kind of hurt that demand there. And in some instances, I know in one country in Southeast Asia, the prime minister had asked people to stop cashing in their people's gold for cash because you're running out of cash to pay them. So you're getting a little bit of that flow back from the recent run up. Also, where are the central banks? Are the central banks still buying as aggressively now at 1,900 as they were at 1,200? I think, there's so many central banks in the world, they all have their different views, but I think that's not going to help them. They're not going to want to jump in and buy them. So near term, I don't share the enthusiasm a lot of people do. I think near term, we definitely need to consolidate in this level or back off a little bit. But long term, gold's I think a really good place to be. Due to the printing, due to the fact that we're not finding it, and just the inflation on the cost of producing gold. There's a lot of pressure on it to go higher longer term, but short term here, there's a bit of a risk here to just due to demand destruction. And if these American investors who have jumped on the gold train get distracted with the next hot sector, they'll be gone in a second, and we'll be eating the shares of all their gold mining stocks, and price of gold will be off several hundred more dollars. So we'll see what happens.
When it comes to the gold mining shares, you invest primarily, I understand, in the exploration stocks. Are there any other gold equities that you would consider investing in over the next few years?
Yeah, well, my forte is getting involved in early names with discoveries. I find that's where we make the most money. Other names where you're looking at, let's say, a mid-tier to larger producers, those producers, their share price is so determinant on the price of gold that, I can make the right fundamental call that ABC gold producer is going to double production and, cut their costs and everything else. But what will overwhelm that is if the price of gold drops from $1,800 to $1,200, I'll get slaughtered, no matter how good I am fundamentally on that. Whereas if I find a gold company that goes from 0 ounces that drills up 5 million ounces, whether those 5 million ounces are worth 1,200 or 1,800, I will make money. So I'm a little bit more agnostic to the price of gold, and that's where I like to be, because I don't want to have my performance driven by just the wild fluctuations in the price of gold. I'd rather have my performance driven by the fact that I could, get out there and find the next big gold discovery.
We'll be right back after this word from our sponsor. Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. Warren, when we spoke at PDAC about 8 or 9 months ago, you had mentioned that you have a position in Colonial Coal. And one of the comments in response to you sharing that was basically, this is an irresponsible position because of coal and the harm that it can do to the environment. If you were chatting with somebody, this person face to face, how would you respond to that regarding your equity stake here?
Yeah, you kind of have to do this with a lot of people who are kind of misguided environmentalists. And I'm an environmentalist myself. I love animals. I love nature. I go out in nature. I've been around the world. I've been to most major jungles in the world. I see the firsthand the destruction of the Amazon rainforest and all the rainforests and jungles I've been to, because as you know, I'm in the mining business. So I watch what people do. And sometimes I'm at the fringe of development in the natural world. So I see the destruction firsthand, and I'm not a fan of it. And, obviously in my more than half century of life, I've watched, various things happen with respect to pollution within cities and things like that. So the first thing this person needs to know is that the Colonial Coal produces a high quality coking coal. So it's not the thermal coal that you produce to burn to make electricity. So that's the first thing. So it goes towards making steel. And right now there's no option other than using high grade metallurgical coal to make steel, and it provides the carbon in the steel to make it hard. So if we want to continue to build electric cars, windmills, solar panels, we're going to need steel, and steel needs iron ore and needs metallurgical coal to make it. So without Colonial Coal's metallurgical coal, we have no steel. Without steel, we don't have electric cars or windmills or solar panels or nuclear power plants or anything that we'll need to move forward as a society to a less carbon centric world. And I do have a problem with thermal coal. And one of the biggest travesties I've seen in my lifetime environmentally has been perpetrated by the environmentalists, namely, let's throw a name out there, Greenpeace, for instance. They've been anti-nuke since 3 Mile Island, possibly before that, and that was the early 70s. So to be anti-nuke in the 70s, and here we are getting pro-nuke again here with these new small modular reactors. But what happened is the whole environmental movement has to look at themselves in the mirror and say, wow, did we ever screw up in the 70s by going anti-nuclear? Because what have we done? Well, for the last half century, instead of producing non-CO2 generating electricity through nuclear power, we've been burning coal, polluting our cities, and putting a lot of nasty stuff in the air in addition to CO2, namely the cadmium and all the other heavy metals into the air for our children to breathe. So that's what Greenpeace has promoted, because by being anti-nukes, they've been promoting putting carbon emissions from burning dirty thermal coal into the air. So who supported Greenpeace during the 70s? Well, the people that were being harmed the most in the 70s by going to nuclear were the thermal coal companies. So it's been a tremendous travesty. So we've spent half of the last half century being anti-nuclear, and here we are today where people are finally figuring out, well, maybe nuclear is not that bad. Nuclear energy, although there's these widely talked about issues with Fukushima and 3 Mile Island, of course, nobody died there. Fukushima, people died as a result, and also the issue in Ukraine. But if you look at all forms of other energy and the lives lost, whether it be due to early deaths with respect to burning coal, or the thousands of people who have died over the years from collapsing hydro dams, nuclear is a very, very safe source of energy. And the shame is we've had half a century where the amount of time and effort into creating a new fail-safe modular reactors has been slowed quite a bit. But fortunately now, there have been some diehards who are bringing to market, Generation 4 modular fail-safe nuclear reactors, which I think will really lead a renaissance in energy and just finally put a nail in the coffin of burning coal to generate energy, because we're not going to produce the energy we need from solar and wind. It's pretty obvious, despite what Al Gore says. We need nuclear, and it's pretty obvious to anybody with half a brain that nuclear energy has to be part of our energy mix, and it has to be a significant part of the baseload power generation. So I guess that's a long answer to this guy. Maybe he should understand what coal is used for. And Colonial produces a high-grade, or will be producing high-grade metallurgical coal used in steel, which we're going to need. And there's some technologies that are looking to reduce the carbon footprint of steel by replacing some of the met coal with hydrogen. But then again, if you're burning coal to produce electricity to produce the hydrogen, how does that help? So we kind of got to get moving forward on cleaner energy first, and then I think over the next little while, we should be able to clean up the steel business eventually too. But let's stop burning thermal coal first.
In regards to the uranium equities, you've been invested in NextGen for some years, and the uranium speculators seem to be suffering. Just when you think it's going to shoot up, it comes back down or trends sideways, and this has been going on for several years now. Is there any hope in the near term for uranium speculators, do you foresee?
Wow, like a lot of people, including myself, have been proven wrong by being a little premature and expecting a uranium rally. I think part of that is that a number of us have been around for the last uranium rally, and I'll tell you, kids, that was a fun rally. So went from virtually, a handful of uranium juniors to like 600 globally. It was just a rally, and I think it was a peak around $140 a pound, and up from about $5, $6, $7 a pound. Like that is That's what you call a rally. That's like the molybdenum rally we had some years ago too, right? So we could have and I think what's happened is a number of people like myself who've been involved in uranium rallies in the past were super excited because we know they're fun as hell to participate in. So I've been wrong in hoping that uranium would have a couple of years ago started strengthening a little bit. All the guys at Cameco have been wrong. I think most senior people in the uranium business, we've been all anticipating the deficit in production to eventually come and bite the market in the butt and lead to higher prices. So that hasn't happened yet, but this past year has been very fascinating in that we've had cuts in production both from Cameco and Kazatomprom, the two largest producers in the world, and we've had some good news on the demand front with new reactors being built, new reactors being recommissioned, their lives extended, things like that, and and hopefully over time this product that slips into the spot market from various sources around the world will gradually dry up as the supply demand deficit from or the demand from the users of uranium and the supply from the producers of uranium. That gap currently is made up from people who have stockpiles, and hopefully, given we've been doing that for quite a number of years, hopefully the stockpiles have diminished and we'll start getting the price up a little bit higher. For instance, second largest producer in the world, Cameco, they can't make any money at these levels at around $30 a pound uranium. So we're destined to see higher uranium prices at some point. Who knows when it'll be? Short term, could happen next year. A number of smart people I know think next year could be the year. And I think there's a good shot at it, next year being the year. And I'll tell you, uranium rallies are fun. And what I like about it, and playing it through NextGen, is that NextGen is a quality asset that would make a ton of money even at today's uranium prices. And they're moving things through the permitting process little by little. They're a great asset, one of the best internal rates of return of any mining project I've looked at. It's a great asset to hold. And with a little luck, you're going to get a double bump, as in you'll get a run on the price of uranium, and then you'll get a bump when it's inevitably bought out by a major. So that's why I'm playing with that. And I think it's a reasonably low risk way to play the uranium market.
You got into NextGen several years ago. You're also invested in a big copper discovery, Cornerstone Capital Resources in Ecuador. Especially in the last 6 months when mining stocks are going up manyfold, do you sometimes weigh the opportunity cost? I know you're waiting for a buyout, but do you feel like you missed it, or are you confident in just holding on to these positions right now?
Well, my view on holding on to the positions, some of my big positions, I can't give them to you, all of them to you, but like Colonial Coal, it's a big position for me. They're a good quality, high quality coal in a great jurisdiction. Logistics are great, good leadership. And then another one, of course, Cornerstone. Then, NextGen, the best uranium discovery in the world. It'll be one of the biggest and best uranium mines. It's class 1, tier 1, without a doubt. And then you're looking at one of the top 5 undeveloped copper projects in the world, being Cascabel, which Cornerstone owns an interest in. That's very, very exciting too. So they're very high quality mining projects. And my view on it is, I was involved in all these names since they were, around the time the discovery was made. Sometimes a little bit before, sometimes during, sometimes a little bit after. But I got in early on these discoveries. And my view is, a good discipline to have is, if I don't get paid, I'll give you an example. I have a bunch of people saying, Warren, you made a really good discovery. You get involved in Cascabel early. Why don't you invest in our copper discovery? We'll go out there and look for some copper in Chile or wherever. And my response is, I'll tell you what, why don't you guys settle down a little bit? Let's see if we get paid here for Cascabel first. If I get paid Cascabel, then I'll recycle my money back into the juniors again. But if the majors aren't prepared to pay us good money when we do indeed find a top 5 discovery, there's no need to invest in juniors. So we need to see here where either the Chinese or BHP and or Newcrest or whoever ends up buying Cascabel, that we get paid a fair price, and hopefully a good price, for our assets, and then that'll prove to me that, okay, well, it's worth it again to recycle this money back into the copper juniors, and let's find some more copper, and then we'll sell it back to the majors once we do make a discovery.
Copper has one of the strongest 6 months charts. It's about $3.25 as we speak. Do you think it's copper's time now? Or are we going to see copper over $4 in a year or so?
Yeah, I don't have a strong view on it, again, near term, but I have to think that, you're looking at all the EVs out there, and what they're coming to various places are banning the sale of non-electrical vehicles here over the next decade or so. You have to think that the demand for copper will be pretty consistent and pretty strong, because you're going to need each electric vehicle requires about 3 times the amount of copper for its build than a typical internal combustion car. So that's just one aspect of it. The other aspect is, as you start electrifying things, everybody's going to need a nice big 220 volt cable to their garage from their electrical panel. Well, that's going to be in copper, and you'll need a lot of infrastructure for all these charging stations. And in that, I'm sure they'll use aluminum some places, but there'll be a lot of need for copper to electrify the world. So I'm pretty optimistic on copper going forward. So again, what it does near term, I don't know, but long term, copper is not the worst place to be in the world, in my opinion.
What's your view on the deflation, inflation, stagflation debate?
Well, I used to be a bond. To give you a little bit of my background, early in my career, I started out I was a bond analyst. My undergraduate degree is in mathematics, so that lent me to do a lot of the mathematics behind bonds. And one thing I learned from the early days, decades and decades ago, about inflation is that the inflation indicators are highly manipulated by governments, and they're not really a true indicator of inflation. I think anybody sitting here watching this podcast knows that inflation is not what the government tells us, right? Like, you try telling me in Canada here our inflation rate's under 2% when you're building anything. Try building a house, and then it's just inflation's way more than 2%. We've all seen it here recently in food. We've seen it in some of our biggest expenses. So inflation is way above what the levels the government says it's at. So inflation's here. It's percolating away. As you know, with inflation, there's a couple ways of handling it. When governments start printing money, is there's the amount of money supply, but the other factor is how that money gets recycled, or the velocity of money. So you need those two things to get inflation, right? So you take a look at Japan, and I'm not an economist, but I've hung around enough of them to know that, in Japan, it's interesting. They printed a fair amount of money, yet people take that money and stow it away and save it, right? And so they're not getting the inflation they need because there's no velocity. People aren't going out there and spending it. Whereas it'll be interesting to see what happens in the US, where they're printing money like crazy. Yet Americans are more likely to take that money and spend it on a new car, spend it on a new house, and spend the money. So I think it'll be really interesting to watch here what happens. And the key thing I'd be watching is the velocity of money. When people start getting more of this money that's been printed into their hands, what do they do with it? Do they save it or do they spend it? It's interesting. I've been watching recently. The U.S. Consumer has been actually paying down debt, which is fascinating. That's very unlike the U.S. consumer to be doing that. There's another article I read recently where mortgage down payments to buy houses there are record highs in the U.S. So it's interesting. Some of the stimulus money that's floating around is actually being saved and being being used for things to reduce people's debt, which is interesting. But once people get past that, let's reduce debt with all this new money that's been printed, say, let's get spending it. It'll be interesting to see what happens and what happens with inflation. And you got to think that and combined with, of course, over the next few years, we're going to see some $1 trillion stimulus programs. It'll be fascinating there because You're going to get China, India, US, all with these massive programs. And they'll be spending money on exactly what I'm invested in. They'll be spending money on copper, steel. They'll need metallurgical coal to go into the steel. And all these commodities will be in demand to build out these infrastructure programs. So I think we're heading to, we're going to see some, inflationary pressure are building. We'll see how much that makes it into the highly corrupted and highly manipulated inflation numbers, but it'll be interesting to see.
Would there be a better commodity than copper to be in that scenario?
Copper is a pretty good one. As far as the infrastructure, because when you think about it, you can build infrastructure programs, you can build highways and bridges. Well, bridges require steel, and steel, you need iron ore and you need metallurgical coal. Okay, that's easy enough. We could buy some of that, but the copper one's an interesting one, because not only do you have copper going into some of these infrastructure programs, but the great unknown is the demand for copper for electrical vehicles and the electrical build out. I was looking at some numbers the other day on lithium, and Elon Musk's projections of how many tons of lithium you'll need to build the lithium batteries for his electric cars. And the numbers just go like this. Well, if you believed any of Elon's forecasts for electrical vehicles, and you say, there's this many, and we'll triple the copper content in all these vehicles from a normal internal combustion engine. And by the way, we're going to be building a bazillion miles of electrical cables to all these new charging stations that are going to be required. Well, that could be a real factor in the price of copper here. So copper, I think, is probably not the worst place to get involved in. And when people ask me about, Warren, investing in all the EV metals, and I said, not really, no. And I said, the only one I invest in really is copper. And they said, well, what about cobalt? And I said, cobalt, everybody knows the political risk of cobalt, and being the bulk of it coming from the Democratic Republic of Congo. And I'm pretty sure the electrical vehicle industry does not want their development hemmed in by the fact that cobalt is largely coming from the Democratic Republic of Congo. So I think every battery manufacturer and every single R&D program at every single university and every major battery supplier in the world, they're all looking at minimizing, if not eliminating, copper. The other one, I think, that might be a little tough to eliminate will be nickel. And for the last number of decades, I've had one of the world's top nickel experts on retainer, and we've been searching the globe for extraordinary nickel deposits, and we've kind of yet to find one that we really like. The last big one was in the early 90s by Robert Friedland with Voisey's Bay, the Voisey's Bay nickel discovery. But we need really a big world-class nickel sulfide discovery, and that means, nickel sulfide is a type of nickel discovery, not versus nickel laterite. We need nickel sulfide. That'll be what we'll need for the batteries, and that could be another interesting place to invest. But I have yet to find a good nickel sulfide project that I want to get involved in yet, and I've been searching for decades. So they're tough to find.
And Warren, one more question before you go. Do you have any interest in zinc right now?
Well, zinc, I have what I believe is I'm invested in the largest shareholder, what I believe is one of the best zinc prospects in the world. I like it. Problem from the point of view, I know zinc's around the $1.30 level, so there is some good demand here. Zinc is a super tough one to make money on. I've known so many people throughout my career to get themselves blown up in zinc. It seems to be a pretty tough one for investors to make money on. But hopefully in this discovery play, I'll make some dough. But as far as, for whatever reason, zinc is a tricky one to make money on. It really is. And I've seen that throughout my career. I've watched a lot of zinc companies blow up. But despite that, I think I'm involved in what could be a big zinc discovery over the next 5 years. But we'll see if I'm lucky enough to make it a zinc discovery. So we'll see.
All right. Warren's website is Rosseau Asset Management. I'll put a link to that in the show notes. And as always, really appreciate your time. Thanks for sharing your insights with the resource investors that listened.
Okay. Thanks a lot, Bill. Have a great day.